Hey folks, this is ACAT with charts for sharkcharts.live, and this is the fifth and final video for my ACAT mini-series, High Resolution ACAT. I've chosen to separate out the video on High Resolution ACAT because in some ways it's kind of a distinct entity in advance on its own. It was not trivial to scale to a higher resolution on ACAT as compared to some of the other indicators previously released. And the release of high resolution ACAT it took place months after the release of ACAT standard resolution. It's a question of trade-offs. You may not be aware, but if an indicator on a chart crashes and has to get reloaded on TradingView, it loses the real-time updating on that tab for that particular indicator instance. So, especially since, as I'll demonstrate across these tabs, one of the distinct advantages of having additional precision is more confidence to go into lower time frames. It matters a lot that I have something that, at a bare minimum, if I load it on a single tab or a single browser tab with just one chart, that I can be reasonably certain it will all load. I would not recommend putting multiple charts per layout with a high resolution ACAT in general. TradingView will try to load all of these at the same time, and it will be hard to get them all to stay not crashed with that many indicator instances. So that issue forced me to rethink how much each indicator was actually covering, but I also need to balance that against how many instances of an indicator I could actually put on a chart without introducing artifacts. So what I ultimately came up with is a system of four sets of calculations for high resolution ACAT. And I've paired it with just the regular 600 to 2000 standard res, at least of this recording, because in most cases, if you're above 600, you probably want to be looking at higher time frames, and you probably don't. It's probably not worth it to have additional indicator instances covering additional sections of periods in high resolution at that point. In theory, you could do it, but you would just start ending up with massive numbers of indicator instances on your chart, and then you'd start having loading problems. So this video is going to be mostly me comparing this versus the standard res and showing what the additional advantages of having the high resolution versions are, because I think a pretty compelling case can be made that whereas with high resolution 3D wave PM, it's a much prettier heat map, and you can get perhaps more precise period lengths with the high resolution map, but it's very laggy, and you mostly don't need it at that level of precision, given that you're manually going through and picking period lengths anyway, so there's a little bit of hand-wavy guesstimation to begin with. But with ACAT, where it's algorithmically scanning with substantially more precision and taking advantage of that precision, it starts to matter quite a bit, especially with compression. So I think the immediate thing to notice is that the sawtoothing is substantially less. I've taken a section of the 4-hour BTC USD chart that I've used for most of the examples in this mini-series, that where it wasn't overexpanded past 600 period. Once it does get overexpanded past 600 period, you notice that since it's moved to using the 600 to 2000 standard res version, you get the sawtoothing back. If we compare that to what the 2 ACAT instance version of this at standard resolution does, you can see that there's just substantially more sawtoothing throughout this range. But there's another interesting thing if you're zooming in and paying close attention. Because we have all of these lower sets of ACATs also looking again once they've mean reverted, we get an overlay of lower time frame or lower period length, compression and expansion that isn't present with the 2 period length version. Now, if you have way too many instances of ACAT covering your range, you start to worry about how many of these are just artifacts and aren't that important. Because if you were to have your mean reversion predicted in at 120 and then 160 and then 210, something like that, because you've got it tracking every individual instance of an indicator every 50 increments. That's going to be basically impossible for you to make heads or tails of or figure out what's actually important. But part of the balancing act to figure out how many instances of indicator I should use to span this to give practical usage was balancing that question. And it's not that it never produces some confusion where you have lower period length stuff that's not that important, but it's, I think, pretty easy to look at this and say that where you're getting this lower period tracking, it's pretty useful. So we've got the longest overexpanded period here. That's determining what's going on for months. And then all of this compression range is an area where on the standard resolution version of ACAT you're getting nothing but the compression range information on the large scale. But if we start to fill in detail at lower period lengths, we start to see that there are little overexpansions and smaller compression ranges at lower period lengths that are subsets of the larger volatility picture. And these pivots are still pretty well obeyed as you go through all of this. Because they're less important than the bigger ones, you start to get questions and artifacts around, well, you've got this mean reversion here. Yeah, it does a nice back test here, though it's not exact. But here it dips down in, it bounces off the much more important higher period length compression range mean, and then gives almost a failed mean reversion condition before the point where that's the volatile drop that actually mean reverts it. So yeah, you've got to be careful about overreading the smaller stuff happening as subsets, but they're still meaningful pivots. And if you were to go to lower time frames, you'd be generating these pivots, and you'd be looking for presumably the confluence with your higher time frame pivots. I think, generally speaking, the real secret sauce with ACAT is the ability to use it on multiple time frames so that you can get the risk-reward ratios from your higher time frame pivots, but then pick the entries more intelligently by looking at the lower time frames of ACAT to figure out where there are going to be confluent pivot points with your higher time frame places. And having that kind of precision is it scales or it multiplies out. the advantage of having that precision on one time frame is more of an advantage if you have it on multiple time frames. But the other nice thing about having some amount of lower subset ACATs with this precision and without crucially all the amount of sawtoothing you'd see at the standard resolution is that you get a little bit of that already pre-built into your higher time frame charts. So let's go into some other time frames, and I'm going to switch just for practicality purposes over to the BitMEX perpetual futures ticker. And the reason for that is because when we get to these lower time frames, you got to go with what the instrument you can actually trade. The actual difference between the average chart and the BitMEX chart is not that large. It's a little more sawtoothing on the standard resolution version, but it's also really important that if you trade lower time frames, that you have a really liquid ticker, and the BitMEX chart is constantly trading with ticks at across every minute, which is not true of all crypto exchanges, and it's not true of all trading instruments broadly. You've got to probably just avoid low time frame charts on anything that's not particularly liquid. I think the advantage, just eyeballing this, between having clear, sharp compression pivots is pretty obvious, especially when you start layering on lower time frame things inside of higher time frame things, and that's going to happen more and more as we go down to shorter and shorter time frames. So if we go down to the 5 minute, you start to pick out details that just totally don't get seen on the standard resolution version because of these subsets. This compression range here, inside a compression range, frankly, is indistinguishable. Even if you had it plotted in this chart, it would just overlap with the sawtoothing down here. You get some detail here, for example, about the tracked T longest compressed period that isn't present on this chart, because tracked longest compressed period is only looking at the longest one on the 14 to 600 standard res in this area, whereas a shorter high resolution version of ACAT picks it up here as an extension of this current compressed range when it exits. And if you were picking out entries in a very short amount of time, you would want this. It's a useful thing to know once you've exited a compression range that this compression range is or isn't still mean reverted and relevant to current price action, whereas you just lose that in the standard res version. You get a particularly bad instance of sawtoothing where it's almost unreadable here, whereas on the high resolution version, it's literally following the pivots really closely. This particular area, the difference in BTC price is about 50, 60 bucks. Most trading strategies, it's not that much. but you can imagine that for some it is, and certainly if you have the option to pick a better entry by $60, that's something you'd want to know about. So I'll move down to the 1 minute here, and I picked a recent illustrative section that has a lot of things I want to show off. And before I get into that, I do want to give the heavy caveat here that for most instruments, you're not going to have the liquidity or the implied risk reward to trade the 1 minute itself. So you should be very careful about that if you're going this far down, regardless of whether you're using the high resolution version of ACAT or not. There's actually a meaningful distinction, an advantage to your trading by doing so. And I'd also warn that as pretty as these pivots will look, if you start getting into staring at 1 minute high resolution ACAT charts, all of this blows up if there's a volatile move on the 1 hour or 4 hour. And you get these heavy spikes that go way outside of the third standard deviation and are just totally unpredicted by the 1 minute chart. So you have a problem if you do this really low time frame chart following, where there are just, as a regular occurrence, moves that are happening on higher time frames than you can visualize. And if you're doing this without paying close attention to the higher time frames at all, you're not going to be able to usefully predict and set up a strategy with reasonable stops or reasonable taking profit targets that take care of something like this happening, which is going to happen, frankly, in BTC USD often multiple times a day. And it is entrancing, the idea that you would come into this because you've looked at ACAT with a 1 minute chart and seen this perfect balance of this mean that ends up being a $500 BART move in minutes. But this is not going to be most within the 1 minute chart, and by the time you know the difference, you're probably going to be stopped out. And if you have to set your stops based on, or to avoid the risk reward consequences of being wrong on a move this large relative to the recent past, you're at significant risk of just massive slippage as a bunch of stops get hunted. So my recommendation before I get into this 1 minute chart is, please, I beg you, use this in combination with higher time frame charts, lest you get overconfident. Now, that said, we can see more examples here, because this is just frankly constantly creating volatility pops, where you just have a lot more information about what's going on in this entire compression range. You're not getting almost anything other than, well, these are broad pivots from the standard res version, but all along the way, you generate a mean reversion MA pivot within this larger compression range. So maybe not on the 1 minute particular, but you see this on higher time frames where you're sure the risk reward makes sense. You can determine pretty straightforwardly here that based on this combination of confluent pivots, you would definitely want to take profits here if you were short, because you've got the higher time frame mean reversion pivot here that's confluent with the compression pivots. You have this overexpansion here, and until you retest it, you would suspect that most of the additional move is going to be sideways for a while, so there's not a huge advantage to staying in. But because you're getting so many layers of information here, you can start getting really into the weeds of, well, if this happens, what happens next? Where are the places I want to look at for confluence? Where are the places where I think price will go because of everything that's acting on it locally? And that's just really powerful, at least when you're doing it on a time frame where you've got the risk reward. Another thing to say about this particular set of charts is just that this does get to a point where it gets past 600 period, which is a lot more common on the 1 minute than higher time frames. And at that point, because you don't have high resolution past 600 among indicators of at least so far, there's at that point you have to deal with the sawtoothing again. It's also the case that at that point the shorter time frame 14 to 600 starts replicating a lot more of what you would get from the high resolution version. But I would say if you're looking at 600 period on the 1 minute, you probably should have moved up to the 5 minute at that point anyway. Probably a little less true for something like the 1 hour and 4 hour, but on really short time frames, if you're looking at moves this large, you're looking at a higher time frame move, and because of risk reward ratios, because of slow vision fees, it's really important that you understand what's going on in the higher time frame at that point. I believe I've zoomed in onto a particularly dense spot here where there's a lot of overlapping things going on with the high resolution version of ACAT that aren't on the standard resolution version, to a point where you might be more worried about artifacts when you have this many means all suggesting mean reversion to them at some point. Now, in fact, most of these means all end up getting respected in this particular example. But if you were at this point in the chart here, and we'll zoom in and hide what happens next. Do you know to respect this mean or this mean? Or just zoom both? That's hard to say. And on the 1 minute chart, you don't have the risk reward to be speculating on that question. You might say both, probably both. And you also run into an issue where, because you've got both overexpansions on period lengths that are particularly high, or high enough that they at least get you this 1/10 LXP plotted, and I've got set to plot on this set of indicators. You've got multiple of those as well. So what's really going on in this compression range? Well, presumably a lot of things are going on, but what you can actually trade and have any confidence on that you've got good entries and exits are probably just the higher time frame, higher period length compression range to begin with, because it's just too hard to reasonably interpret otherwise. And you'll see this a lot when on something like a 1 minute, because you have so much volatility compared to higher time frames at that degree of candle size, and that amount of local volatility is defined by just much smaller moves. But if you were to see this on any time frame, my suggestion would be move up in time frames a bit, or perhaps double check the standard resolution version to make sure that you're not getting overly attached to means that are too small to matter compared to what's driving things in the higher time frames.